What if I told you there's a simple math equation that shows Kaspa could explode by over 4,000%? And what if I told you that by 2029, this altcoin could become more scarce than Bitcoin itself? You're probably thinking this sounds too good to be true, right? Well, stick around because the data I'm about to show you will blow your mind. We're talking about potential life-changing gains, diamond-handed holders who refuse to sell, and a scarcity model that could flip the entire crypto narrative on its head. But before we dive deep, smash that like button if you want more alpha on hidden gems like this, and let's get into it. Alright crypto fam, let's talk about something that's been keeping me up at night. And it should keep you up too. We're dealing with Kaspa, and the numbers I'm seeing are absolutely mind-blowing. Now I know what you're thinking. Another altcoin pump prediction? But hold up, because this isn't hopium. This is cold, hard mathematics combined with on-chain data that tells a story so compelling, even the most skeptical traders are starting to pay attention. Here's the thing about crypto markets. They're driven by supply and demand, adoption curves, and market psychology. But sometimes, just sometimes, you get these perfect storm scenarios where all the fundamentals align. And guys, I think we might be looking at one of those moments with Kaspa. See, while everyone's been obsessing over Bitcoin ETFs, Ethereum upgrades, and the latest memcoin mania, something interesting has been brewing in the background. Kaspa has been quietly building one of the most robust blockchain infrastructures in the space, with transaction speeds that make other networks look like they're stuck in dial-up internet days. But speed isn't everything, right? What really matters is adoption, tokenomics, and investor behavior. And that's where this story gets really interesting. Because the data I'm about to show you suggests that we might be looking at one of the most undervalued opportunities in the entire cryptocurrency market. The market cap is still relatively small compared to established players like Cardano, Solana, and other top-tier altcoins. But what happens when institutional money starts flowing? What happens when retail FOMO kicks in? And most importantly, what happens when the mathematics of scarcity start playing out in real time? Okay. Here's where things get absolutely wild. Crypto analyst Mona just dropped a tweet that sent shockwaves through the KAS community, and for good reason. She did something that sounds simple but reveals something massive. She compared Kaspa's current market cap to Cardano's. Now, before you roll your eyes and say, market cap comparisons are useless, hear me out, because the numbers she crunched are legitimately jaw-dropping. If, and this is a big if, Kaspa were to match Cardano's current market capitalization, we're looking at a KAS price target of $3.60. Let me repeat that. $3.60 per token. Now you might be thinking, okay, that's nice, but what's the actual upside? Well, buckle up buttercup, because from today's prices, that represents a 4,197% gain. That's not a typo. We're talking about a 41.97x multiplier on your investment. Think about what that means for a second. A $1,000 investment becomes $41,970. A $10,000 position becomes $419,700. We're talking about serious life-changing money here. But here's the kicker. Cardano isn't even close to being the highest market cap altcoin. Ethereum sits way above it. Solana has been climbing. Even XRP has higher valuations during certain market cycles. So if Kaspa can match just one of these established players, we're already looking at astronomical returns. But wait, there's more. And this is where the story gets really interesting. I've been digging into the on-chain data, and what I found is absolutely fascinating. According to Kaspa Daily, and these guys track this stuff religiously, approximately 14% of all KS tokens haven't moved in over 2 years. Let me put this in perspective for you. 14% might not sound like much, but in crypto terms, that's massive. We're talking about investors who have been holding through bear markets, bull runs, corrections, and everything in between. These aren't day traders or swing traders. These are diamond-handed believers who are convinced that Kaspa's long-term value proposition is so strong, they're willing to sit through years of volatility. And here's why this matters from a price action perspective. Supply and demand economics 101. If a significant portion of the circulating supply is locked up by long-term holders, that means less liquidity available for active trading. When demand starts picking up, whether from institutional adoption, retail FOMO, or fundamental developments, there are fewer tokens available to meet that demand. Basic economics tells us what happens next. Prices go up, and they go up fast. But that's not even the most insane part of this story, because there's a projection out there that's so bold, so audacious that if it comes true, it could completely flip the cryptocurrency narrative as we know it. This is where things get absolutely mind-bending. There's an analyst called Kaspa who just dropped a prediction that honestly made me do a double take. He's claiming that by 2029, that's just 5 years from now, Kaspa will surpass Bitcoin in stock-to-flow ratio. For those of you who don't know, the stock-to-flow model is one of the most respected scarcity metrics in all of finance. It's used to evaluate precious metals like gold and silver, and it's been adapted to analyze Bitcoin's scarcity dynamics. The higher the stock-to-flow ratio, the more scarce an asset is considered to be. Bitcoin's scarcity is literally its biggest selling point. It's why institutional investors are buying it. It's why countries are adding it to their reserves. It's why people call it digital gold. The entire Bitcoin bull thesis is built on the foundation of programmatic scarcity. But what if, and I know this sounds crazy, what if there was something even more scarce than Bitcoin? Kaspa is asking a question that should make every crypto investor sit up and pay attention. Are you prepared for the flip? Now, I'm not saying this is guaranteed to happen. Nobody can predict the future with 100% certainty. But let's think about what this would mean if it played out. If Kaspa becomes more scarce than Bitcoin by 2029, we're not just talking about price appreciation, we're talking about a complete narrative shift in the cryptocurrency space. Instead of comparing altcoins to Bitcoin, people might start comparing Bitcoin to Kaspa. Think about the psychological impact of that. Think about how institutional money flows when scarcity narratives change. Think about what happens when the hardest money in crypto isn't Bitcoin anymore. The implications are staggering. And here's the thing. This isn't just about mathematical models and theoretical projections. The behavioral data is already showing us that long-term CAS holders are exhibiting the exact same conviction patterns we saw with early Bitcoin adopters. Remember those early Bitcoin holders who bought at $100, $1,000, even $10,000 and held through multiple bear markets? They didn't sell because they believed in the long-term scarcity narrative. They understood that Bitcoin's fixed supply would eventually create massive upward pressure on price. We're seeing the same psychology with Kaspa holders right now. 14% of the supply locked up for over 2 years. That's conviction. That's diamond hands. That's the kind of holder behavior that creates explosive price movements when market conditions align. But let's not forget why people are so bullish on Kaspa in the first place. This isn't just about tokenomics and scarcity, there's actual technological innovation happening here. Kaspa operates on a BlockDAG structure instead of a traditional blockchain. Without getting too technical, this allows for much faster transaction processing and better scalability than most other cryptocurrencies. We're talking about transaction speeds that make Ethereum look slow and Bitcoin look positively glacial. In a world where crypto adoption depends on real-world utility, speed matters. User experience matters. And if Kaspa can deliver the transaction throughput that supports mass adoption while maintaining the scarcity dynamics we just talked about, we could be looking at the perfect storm for explosive price growth. The crypto space has shown us time and time again that technological superiority doesn't always equal market success. Just look at how many Ethereum killers have come and gone. But when you combine genuine technical advantages with strong tokenomics, long-term holder conviction, and realistic market cap targets, you get scenarios where massive price appreciation becomes not just possible, but probable. Alright, let's bring this all together and talk about what this actually means for you as an investor. First, the reality check. These are projections, not guarantees. Cryptocurrency markets are volatile, unpredictable, and influenced by factors we can't always anticipate. Regulatory changes, market crashes, technological failures, or shifts in investor sentiment could derail any price prediction, no matter how well researched. Now, I want to be clear about something. I'm not telling you to mortgage your house and go all in on KS. What I'm telling you is that the risk-reward profile here is extremely compelling for anyone with appropriate position sizing and risk management. If you're already diversified in crypto, if you understand the risks, and if you're looking for asymmetric upside opportunities, Kaspa deserves serious consideration in your portfolio. The mathematics are clear. The holder behavior is bullish. The technical fundamentals are strong, and the market cap targets are achievable based on existing precedents. But here's the most important thing. Time is a factor. If these projections play out, early positioning is going to be crucial. The difference between getting in now versus getting in after institutional adoption kicks in, could be the difference between 40x gains and 4x gains. So there you have it, the mathematical case for Kaspa's massive price potential. From the 4,197% market cap comparison to the diamond-handed holder behavior to the 2029 scarcity projections, all the pieces are lining up for what could be an explosive move in KS. If this analysis resonated with you, smash that like button, subscribe for more deep dive crypto analysis, and drop a comment letting me know. Are you bullish on Kaspa's long-term potential? Are you prepared for the potential flip? And remember, this kind of research takes time. If you want to support the channel and get early access to analysis like this, consider becoming a member. The link is in the description below. Until next time, stay safe out there, and remember, in crypto, fortune favors the prepared. This video is for educational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and risky. You could lose all of your invested capital. Past performance does not guarantee future results. Always do your own research and consult with qualified financial professionals before making investment decisions. Never invest more than you can afford to lose. The presenter may hold positions in the cryptocurrencies discussed.